Welcome everyone to Antler Gold's Q3 update, where we're going to be detailing some of the highlights from this past quarter, calendar quarter, so from July, August and September of this year, and also just give some highlights about what Antler is currently busy with and discuss some of the news releases that were released during this quarter. Again, just starting off with some cautionary language and our legal disclaimers. I don't need to read through it now, but I do recommend in your own time if you want to have a read through that, and that does justify everything that I'm saying in some of my forward-looking statements. So the webinar agenda for today is we're going to cover off the Q3 news. We had 2 news releases during the calendar quarter, third quarter. We're then also going to discuss how Antler is slowly becoming a prominent royalty generator in Southern Africa. We're going to discuss some of the new projects. I'm not going to go over our current portfolio, but I'm going to discuss some of the new projects that have been issued to us. And then in closing, what I will show is the royalty generator business, how that's starting to come through, and then the projects and the Q&As. And then we're going to finish off just with a simple Q&A session where I'll be able to answer any questions that you might have, and also highlight some of the more technical stuff if needs be. So quite a quick web agenda, but I think it's wholesome in its content. So as the shareholders would have noticed and other stakeholders, Antler is busy going through a strategic change. And in short, we're looking to run Antler as a business. We want to generate value and build value and realize it in our market cap and then ergo our share price. We're going to do all of that while we remain entrepreneurial, delivering value to partners and communities and everything. But what this allows us to do is to generate both short and long-term revenue for the company. And the hope is through that this short and long-term revenue would allow us to do less highly dilutive financing and allow us to generate and have exposure to the multiples that come from a discovery process. And that exposure is going to be kept through royalties. Those royalties will continue moving up, and what they will allow us to do is build tremendous value. So how we're doing this all is the exciting part. Well, we're doing it through organic royalty generation. So it used to be called project generation. We're now not retaining, we're not going to focus on retaining equity in projects only. We're going to focus on definitely retaining a royalty on all our projects that we produce, as well as getting cash and equity payments and exploration commitments from our partners. What that allows us to do is deliver the value on a short and a long term for all our stakeholders, for our shareholders, our partners, and the communities we operate in. Project generation, as I'll show you as I work through these slides, is already a profitable business on its own. And the approach that we're doing ensures that this growth is through income generation. And it's not just targeting a hope that we hit this at the right time. I've shared a lot about our team in the past, and we do have proven geological expertise. And we've got active exploration projects through internal as well as active partnerships going throughout the whole area of Southern Africa. And that's an exciting part. And we're doing this all with ESG excellence in mind. So what we're creating here is we're not only creating a company that has short and long-term revenue, a business, but also for our partners, we are creating a product, which is our projects that we'll be generating, that give them strong technical foundation, forward work program, as well as a strong social license to operate there. We believe in Africa as a region. We believe in the transition that Africa is currently going through, And we are the correct team to help build those relationships and social licenses that allows for foreign investors and other investors to come in and look at our projects. So therefore, we're looking to run Antler as a business. We create a good product that has got sound technical, sound ESG, and sound legal compliances, and then that is then sold off for value to our partners once they come in. Now, the plan and the trick with project generators or royalty generators is that you don't just hold land to hold land. You need to hold strong, viable projects. You need to have multiple projects at various levels going on. And these projects have to be in commodities that are coming into a positive market sentiment. As we know, we tend to run a counter-cyclical project generation role. We look at projects that have the ability to be acquired either through local pegging or doing transactions with local prospectors or stakeholders. We treat them fairly as partners, and then we bring them along once we then do an exit at a later stage if the project moves up or passes our mustard. So at the moment, we have six active projects. We have the 4 now in Namibia, with 4 applications that we are busy waiting to be awarded. And then we have the 2 in Zambia, 1 gold and 1 rare earth there. And then we have a new application that we're busy waiting for us to be awarded. What this allows us to do is build a pipeline of opportunities. And it allows us to have projects at various stages along the royalty generation triangle that we then don't focus our energy on the projects that make the strongest technical sense. So let me put my pointer on here. As you can see on the left-hand side here, this discusses all our current applications that we have in our pipeline in Namibia and Zambia. These are filling our conceptual projects foundation here. These conceptual projects are early stage projects that we have managed to secure massive land on it that have strong technical backing, strong technical fundamentals. And we are now going through a de-risking or a testing of our concepts. Once these concepts have then been proven, it then moves up onto the exploration stage. As you saw recently with our news release, we sent out at the beginning of this month, in partnership with RES Prime, an NGO, we have moved our Ufipa Gold Project, which is a large exploration project in the northeast of Zambia. We moved it up from conceptual to exploration. And in essence, what we're doing there now is we are willing, and we've upgraded it to spend money on the ground, get boots on the ground, and get our first set of results. And that's going to further validate our concepts. And that allows us to move it to the next stage, which is the pre-discovery stage, and the stage where we would normally be transacting with our partners. We expect, as this pipeline continues filling into this triangle, that a lot of projects will fall off during these areas. And that's a positive for us. We don't want to keep a project if we don't see that there is a long-term value to it. We don't want to waste any more capital or resources on that project. So we do that by de-risking it step by step. We follow what's known as the mineral systems approach. And that's a set of questions that have to be answered based off technical analogies, which allow us to move it up and then justify further expenditure as the risk decreases. The mineral systems approach is an approach that was pioneered by the oil and gas industry. Due to the high cost of drilling in the oil industry, they needed their targets to be extremely de-risked by the time they got to drilling. We're using a similar approach, so that we do not, 2 reasons: we do not waste money exploring on projects that don't have any endowment capacity or any potential of actually moving forward into any development or producing asset. And secondly, so that the projects that we sell are de-risked and we can get a high value, a high ask price for those, because the partners that we sell to know that the technical work has been done, and that allows them to move straight on to the drilling. So that gives us a value addition there to the projects that we're selling, and it allows us to ask higher prices. What this also allows us to do is it gives the company optionality. The traditional junior model is to find a project, invest a whole bunch of risk capital into that project, and develop it up to a feasibility stage. And then on top of, once that is done, and that time span, according to the mineral cycle or the Lazargo curve, can span anywhere from 5 to 15 years and takes huge amount of risk, normally leading to highly diluted financings, and then also potentially ending up with you holding a project that is either overcapitalized or is not attractive to people who can afford, or partners who could afford to purchase it and take it into the development slumps and then get it into production. So what we're targeting to do here is give us as a company and our stakeholders, we want to give them short-term revenue income through our partners coming in and paying cash and potentially equity in listed companies, as well as exploration commitments on our projects. There's a value addition there. We maintain a exposure to the discovery cycle if discoveries go from discovery into development and production through our royalty and other holdings. But that also allows the company to have optionality with projects. So for projects that are sitting in the pre-discovery section, like our Onkoshi and our entire Erongo project package, it allows the company to strategically look at options. There could be options to identify correct partners and sell them out. There could be options to self-finance to move it along into further discovery or feasibility, or there could be options to look at spin-out options or other such mechanisms. This allows us to act entrepreneurial, but also allows us to protect against highly dilutive financings. And as you see there, we've put Kessia onto the next stage, so that's been upgraded. Kessia, from a technical standpoint, no discovery has been made on it, but from Antler's perspective, we have signed an agreement with Prospect Resources in the second quarter of this year, and we have now a royalty once that option agreement has been fulfilled. That came with certain cash payments, as well as equity payments and exploration commitments during the option. So that shows you how value can be created as we move along this, and it shows how the company is protecting itself from wasteful expenditure, but also from any delays that would come from the bureaucracy of licensing issues and everything like that, because we have a padded pipeline of projects that can generate not only work, but news and project or deal flow for the company to create revenue opportunities. So our team, again, we've got the right mix between capital markets and technical. I've focused previously a lot on our strong technical capabilities with our exploration manager and senior geologist. But we also have a capital markets pedigree. And coming back to the company's optionality on projects, that's a key fundamental ingredient to the strategy that we're putting forward. We not only can put together strong technical projects, but we can put together good transactions and deals that enables us to retain and capture as much value for our stakeholders as possible, because we've done it before. And we get that through our two founders, Dan Witke and Wade Dar, who have been accomplished entrepreneurs right through globally. And that allows us, we lean on them and we work closely with them for all these transactions and negotiations. So this hasn't changed since Q2, but I do like to highlight over here, we're starting to see the fruits of our project generations. And that came from our transaction with Midex, a private Canadian company that's a lithium explorer in Ontario. We sold them our Crescent Lake lithium project, and that brought in some cash on signature, as well as with our transaction on the Osino Resources rare earth. So at the end of March, we had 395,000 Canadian dollars in the bank account. And at the end of June, we had 409,000 Canadian dollars in the bank account, according to our financials. That displays that the company, Project Generation, is a profitable business in itself. We are able to, for cheap, generate a good technical project that is attractive to partners, allowing us to receive short-term revenue back from the money that we put in, plus some value. And then our operating costs will be looked after from the money that is generated from those transactions. And that, how does that filter down to our stakeholders, to our shareholders, and the likes of yourselves? Is the company protects its share register. And this will ultimately lead into a higher market cap valuation, and that would lead into a higher valuation of shares. So there's short-term value and long-term outlook, and with our exposure to the royalties. And I think definitely for shareholders, in where we're seeing the market and the state of the market of what it's in now, and the volatility and all the uncertainties, having a company, a mineral company, that gives you exposure to the excitement that junior mining can have, as well as being self-sufficient and generating an income, not leading to highly diluted financings, it's a win-win. And that will come back in value for its shareholders. And that's our target here. So just as a recap, before I jump into projects, I'm just going to close here and open up I wanted to run over some of the news that we announced during the Q2. The one is that we had just completed a soil and concrete sampling campaign over our Erongo project, which is contiguous with the Osino Resources Twin Hills discovery. As you can see on the map from the press release, we had initially set out and identified quite an exciting anomaly, and we have now extended that soil and sampling program to continue for the rest of our licenses. We collected a total of 6,015 soil samples, and those samples are now going to go in for analysis, and we're eagerly awaiting those results. Then on September 14th, we announced a bit of an exploration update for what's going on in Namibia. And what we wanted to highlight here is our pipeline of applications are starting to come through. And we were awarded 2 gold licenses, as well as our Zigatoni copper license in the south. That was quite a big step for us to start becoming known as a royalty and project generator. And we're starting to yield tangible results, as what I was able to show you in our cash positions at the end of March compared to the end of June. And that's really exciting. What we also outline here is that for the rest of 2023, we're going to be continuing building that pipeline that I was able to show you. And we're going to continue to advance some of our joint ventures that we have got in place at the moment. So the company is moving forward, and this transition is starting to yield proper results that is exciting for everyone involved. Okay, get back up here. So one of the projects that is gold projects that have recently been awarded to us is the Paresis Gold Project. Our exploration concept here is we're targeting the igneous complex, and this is a complex that has pushed through. It has all the right plumbing and everything. I'm not going to get too technical on it, but it's a conceptual project that we know has similar analogies of known gold deposits and recent discoveries in Namibia. So we put the application in the end of 2022. We have now gone through the environmental permitting, and we've now moved the project along to actually start working it during the remainder of 2023. Here you can see the license that was awarded to us, EPL 8711, and here's Antler Gold's additional license that we've had an application, and we're waiting for that to be granted to us. To give you an idea of where these licenses sit, over here you have the Otjikoto B2 Gold, Otjikoto mine that's owned by B2 Gold. You have the Okorusu Fullspar mine here, and then you have the recently discovered and announced Eureka Gold Project by Osino Resources. So we're on the right area. We're in what's known as the Damara Belt, which is slowly getting known as an emerging gold district. And through this land position, as well as our others in Namibia, we hold a commanding land package here in highly prospective ground. So moving forward for the remainder of this year, there's work planned on the Paresis Gold Project, which will start during the last quarter, during this next couple of weeks, where there will be some sampling, some mapping, and some work happening on that. And we expect, again, to move it up that triangle and become a project that we're able to transact on to create a royalty and revenue income for the company. The next project that we were awarded in Namibia was the Zigatoni Copper Project down in the south. And this is quite an exciting project, very early stage. We all know copper is the doctor of economics. And that's one of the benefits of Antler Gold's business model, is we not only are providing optionality on the exit and the value that we can create, but we're also giving protection and we're giving optionality to the commodity exposure. And we don't need to be drilling all of these projects at the same time. All of these projects with different commodities will come into vogue and favor at different times. If we have diversification of our commodity holdings as well as our geographical exposure, if there are any concerns that come up with the copper project, if the copper price pulls back and the gold projects go up, then there'll be more transactions going on our gold projects and vice versa. And we hope to continually diversify our offerings so that we protect ourselves against the cyclical nature of the mineral industry. Historically, there was a grab sample taken here by someone close to Antler Gold, which has returned a 13% copper value. So the company is in the process of acquiring the environmental permits, which is required by legislation, and we then will be moving forward into full-on exploration as it moves up our mineral systems approach. That gives you an idea of the license. It's 40,000 hectares, as well as where it is located in Namibia. So I think I wanted to, again, we've had the UFIPA project for some time, but I wanted again to highlight, apologies. I wanted to again highlight, first of all, the size of this project, but also where this project is located in northeast Zambia. From a geological the best place to make a discovery, or the best chance to make a discovery of a world-class deposit, lies if you're exploring in areas where there's already known world-class deposits. And then secondly, if you're looking for endowment and size and growth potential, you need to be looking at the earlier stage of exploration, where you have the potential of securing a significant land package, and as people say, and as we say, start working in elephant country. So what we've been able to do in northeast Zambia is testament to Antler Gold's not only technical proficiency, but also its operational proficiency, together with its partners, Sherpa Resources, is we've been able to secure a almost 500,000 hectare land package in a very fertile gold belt, the Bendian Belt. A lot of gold mines have been found there on the Tanzanian side, but geology doesn't conform to borders. So we've just started, as we announced on October 3rd, in partnership with RES Prime, an NGO, our first field visit there, where we were conducting stream sediment sampling and rock grab sampling. That project is due to finish during this half of this week, and those samples will be submitted to the labs for processing. And we expect to get our first results on that project, and we're really excited. Those results are potentially going to come through in Q1 of next year, and that's going to further display the company's ability to not only put together strong technical projects, but also to work them efficiently and quickly and cheaply. I would also like to point out that we, in partnership with RES Prime and the University of Zambia School of Mines, have taken 2 students, master students, and we've given them field experience on an active exploration project. And this is testament to the company's commitment to its not only partners, but also the region that we are operating in. We are developing relationships with the university, with the students, and we're fostering and handing over skills that we can build an African country that's building up African opportunities, and allowing us to bring not only the mineral wealth that Africa has and can offer, but also capturing a lot of that for our shareholders and our partners and stakeholders that we are active with. And we're trying very hard, and we'll continue to try hard to do this in a sustainable manner for all our regions that we work in. So why invest? Things have changed. People are asking, where's the focus? And the focus is in quality, discipline, culture, and growth. I've touched on it a little bit previously, but we have high quality projects. We've got a total of 7 active projects at the moment that exceed 600,000 hectares. And we've got continued project generation going on. That continued project generation is done in a disciplined manner, and we do mitigate through our technical proficiency and our adherence to the mineral systems approach, the risk that we're taking on, and we maintain all our upside through prospect and royalty generation. The culture, I touched on the fact that we have got a strong pedigree in the capital markets that's been augmented with a team that is technically proficient. And we know that we have to act entrepreneurial. We come from an entrepreneurial background, and we're going to continue doing that with the objective of creating revenue opportunities, short and long term, for our shareholders and stakeholders. Right now, we've got growth, we've got an attractive valuation with the opportunity for the re-rating through our exposure to discoveries and project generation. So as the company continues to do quality transactions and some of its portfolio moves up, the re-rating opportunity for our market cap remains. Just to display some of the tangible results that have come through. Obviously, I touched on our Kessia rare earth property in Zambia. We've got strong partners there, Prospect Resources. The year it was optioned out to them was this year. And the commodity there are the rare earth elements. The term there, again, we have a 2% royalty. We retain a 49% interest in the project. There's project expenditure payments and cash payments to ourselves over the course of this earn-in option. And there are exploration expenditures. So that's a quality option over the next 3 years. If the results are there, Prospect Resources will move through, allowing us to generate some short-term cash and then maintain our interest on the other side. Secondly, we also announced the Crescent Lake lithium deal, where we sold 100% of our Crescent Lake project in Ontario to Midex Resources. We sold that for a cash payment and then 6% common share of Midex. The transaction was 12%, but we had a shared agreement with Sona Nanotech, a company related to Antler Gold. So what that allows us to do, Midex Resources is also in the process of going through a listing transaction, a public listing transaction. Once that is completed, Antler Gold will be sitting with 6% of tradable equities and a value. Again, allowing the company to maintain an exposure to lithium in a very hot area of Ontario, located right next door to Green Technology Metals, the Crescent Lake projects, and exposure to a company with a strong management team and proven track record with making discoveries. Thank you very much, everyone. I hope I didn't run through that too quickly and everyone was able to get some value from it. Please feel free to follow us on social media where we put out continual updates. And I look forward to updating you again during the course of this quarter with press releases, as well as our next Q4 update, which will be during Q1 of next year, potentially in February.